I get asked this question quite a bit, more frequently than I would have ever anticipated. But there is a myth out there that a boyfriend, girlfriend, fiance cannot go on a VA home loan. Well, if you want to know the truth, stand by to get some. My name is Brad Stinson, the Mortgage Marine. As you would expect, I deal with a lot of veterans every day. And the sheer amount of questions that come back to me are what drives my videos. So just recently I had a run of questions in regards to, hey, can my fiance be on my VA loan with me? Well, why don't you run down to the courthouse and get married real quick? I'll be your witness. Then it's no longer a joint loan. Well, what the heck is a joint loan? Let's go to the VA Lender Handbook and take a look. All right, there's an entire chapter in here called Joint Loans Defined by the VA is made to a veteran and a non-veteran non-spouse, or two or more veterans. Those are called joint loans. If a veteran is married, that's not a joint loan. That's just a typical loan. Joint loans, 100% possible, 100% doable, but as with anything else in the overall underlying theme of every video that I do, who you work with truly does matter, because there are a lot of nuances to this, and if you are working with just some fly-by-night loan officer, your deal's gonna blow up and you just ran over that massive I.E.D. So let's avoid that. What are the nuances? Well, first off, we just discussed what a joint loan is. Now, if you think back to one of the previous videos that I posted about entitlement. Entitlement is just the VA's fancy way of saying insurance. We're going to insure a lender 25% or guarantee, that's where the VA Home Loan Guarantee Program comes from. In the event of default or foreclosure, 25% is going to go to the lender. That's entitlement. Okay, so the VA Home Loan, what makes the VA Home Loan the VA Home Loan is 25%. I keep saying that because there's a reason. Now, when we're dealing with a joint loan, let's take $200,000 purchase price. The VA looks at it like this: two buyers. So buyer A, the veteran, has to qualify for $100,000. Buyer B, the fiance, also must qualify for a $100,000 loan. So it's split in half. The cool part is the non-veteran, non-spouse is held to the same credit underwriting standards as the veteran. Boom, that's huge. But because we're split in half, we have that 25% thing again, right? 25% allows the veterans to put 100% financing or zero down. So if we're splitting this off, what's 25 divided by 2? Well, math for Marines worked for me because 12.5%, right? So the VA is going to say, hey, we're going to kick in 12.5% to the veteran. That leaves 12.5% left for the fiance. He or she is responsible for that at closing in form of down payment. That's where it gets a little bit tricky. You have to learn how to calculate that out. Now, every single VA joint loan must, pause for effect, must be submitted to the VA for prior approval. So what does that mean? That means me, the lender, you go under contract, we start rocking and rolling, we get this thing underwritten, we now have to send it to the VA. They have to fully underwrite it. Once it comes out of the VA, it comes back to us, we have to resubmit for the final clear to close, and then we can close. Why is that important? Because it now extends our timeline. Typically 30 days or less is how we roll. We might have to bump it to 45 just to be safe. Still smoking those other lenders. Now, occupancy. This becomes a huge question when we're talking about joint loans. Who can satisfy the occupancy requirement within 60 days of it being your primary residence? Well, Chapter 7 of the VA Lender Handbook says any veteran that's using the entitlement must intend to occupy as primary residence. If you go back to see how or who we can make VA joint loans for, mom and dad is on there. Mom and dad do not need to occupy the home. They can co-sign. Boom. All right, that's a lot. That's a huge knowledge bomb right there. That's massive. You can have a co-signer that doesn't occupy the home using your VA home loan benefits. VA joint loan, it's fantastic, right? But we still have that 12.5% and so on and so forth. So again, who you work with truly does matter. Two veterans, let's say I'm on active duty. I want to live off base because living in the barracks, yes, it was a riot, but it gets older really fast. So I want to buy a home off base. But I'm in California. Housing prices are ridiculous, and I'm an E5. I don't make that much money. I can't afford it. So I'm going to ask another E5 from my team, hey, do you want to go in and buy this home with me? That's a VA joint loan. All right, 2 or more veterans. They're both going to use their entitlement because home prices out there are absurd. This is where it gets really cool, because if you think back to the primary benefits video I shot, you can purchase a home 1 to 4 units with a VA home loan benefit. Well, if you're going to use a joint loan, 2 veterans using their entitlement, you can purchase or construct or build up to 6 units or however many veterans you have. So if you have 4 veterans, you can build an 8-unit place. Every veteran using their entitlement must live in the home. So you can build a house that has 4 units. You and the other veteran can have 2 units. 1 for you, 1 for them. 6-unit property. And effective. And the video I shot about income, you can use the income from those rental properties up to 75% if you have no documented history of being a landlord. That's just more increasing your purchasing power. Again, who you work with matters. Truly does matter. All right? So, to recap, yes, girlfriend, boyfriend, fiance can be on a VA home loan with you. It's called a joint loan. It is made to a veteran, non-veteran, non-spouse, or 2 or more veterans. Recently, I just had a question come up in regards to homosexuality. Are we able to provide VA home loan to a husband and husband? Yes, it's no different than, it's a spouse. It's not husband and wife in the VA lender handbook, it's spouse. So husband, yes. Wife, yes. As long as you're married. All right. If you are not married, then it becomes a joint loan, 12.5% down. It is possible, 100% possible. Who you work with matters, and knowledge is power, and power is everything, especially in this market right now. Again, my name is Brad Stinson, the Mortgage Marine. Hope you like this video. Like, share, subscribe, leave me feedback. I love shooting videos for you. I'm starting to run out of content. No, I'm just kidding. I get questions all day long, content for days. But if you have anything you want me to talk over, please leave a comment. Happy to do a video for you. Have a great week. Semper Fi. Get after it.